Hey everybody, how's it going? Welcome to a capital hungry New York trading session. It is currently roughly 8:45 a.m. Eastern, 45 minutes into New York Open, and we are going to be doing our normal market analysis stream, looking for trade ideas across gold, GBPJPY, GPUSD, Euro USD, USD CAD, and of course US 30. How's everybody doing? Can you guys see me? Can you guys see the screen? You guys should be able to see the CPI data that just got released at 8:30, which was better than prior, but still on expectations and forecasts, with the yearly still being above the forecast, not showing as drastic of a decrease as investor expectations, with inflation still having that steady rise from forecasted expectations there. Alright, I'm just going to put that out of the way for now, get my other screen set up here. You know, I had a power outage when my PC shut down and I got to set up all my charts again. What the hell? Yeah, that's how you know I had a power outage for sure. Damn, USD CAD gonna give us those 1.25 cells. All right, everything else looks good here. Okay, this is the dollar. Yo, did I not tell you guys about this spot last night? Not you guys in the YouTube. Let's talk about the private channel people. Did I not tell you guys, hey, dollar's bullish, but watch this area. We're probably gonna get a pullback from here. Yes, so we're gonna use that to our advantage now. 93.2. Yeah, it's close. It's close. GU also coming back above 1.38 area. Looks like that zone we were looking at got deleted. But we were playing this little zone here as well at 1.38. Okay, sorry guys. Sorry about the delay. Sorry about the delay. I had a power outage. Sorry about the delay right now. I just had to set up my screens because obviously, usually my computer stays on all the time. Like, I don't shut down my computer unless it has some update or it needs to be shut down. You know what I mean? So I just like pretty much just turn my screens off, come back, turn my screens on whenever I need to, like, you know, charts are always ready. Everything's there. But with a full power outage, had to open up all my little programs and stuff there again. But now we're good. Now we're good to go. Okay? So, okay. Let's get it going here. Let's start with some analysis. Don't worry about the stream reminders and all that shit. You guys can go read all the description. You can read the stream reminders quickly on your screen. You can also read the layout on the screen to get all of your resources to Capital Hungry, whether it's the Twitter, my Telegram, the free Telegram analysis channel, the YouTube channel itself with hundreds and hundreds of videos. It's all here. You guys have seen it. All right. Before we jump into some trade ideas now, potentially using the NYSE volume to our advantage to come, just remember, you guys are all manual retail traders. You have emotions and thousands of other factors that impact your decision-making process rather than just logically thinking. So make sure you follow your trading plan, follow your risk management plan, focus on the long-term vision, keep emotions out, and avoid crashing your account. The only economic data we had for our New York session and for today is the core CPI, US CPI figures, which just led to that short-term increase in gold here and also led to a drop in the dollar and US stock market going up just a bit higher than its record highs, printing new all-time highs actually. US 30 just printed new all-time highs. Everybody, round of applause. Everybody, round of applause for the stock market making new highs every week. But anyways, what we're understanding is that inflation is starting to decrease from prior numbers, but not showing as aggressive of a decrease within the Reuters poll and economist expectations. We still pretty much fell in line with the forecasted expectations, besides the yearly, which is still 0.1% higher than what was expected. This on par inflation or slight increase inflation over the forecasted numbers still led to a dollar pullback, US dollar weakness, as well as gold breaking above 1739 and giving us that initial break of 1739 buy setup. Okay, when you also come here and look at the dollar individually, what I was telling the private chat is it's not a random area the dollar just rejected around. We already had expectations from previous price sensitivity areas here that if the CPI figures were not as aggressively rebounded in terms of what we saw regarding the employment data, if you guys have noticed, the employment data has been having a very, very strong rebound. The reason why gold has been dropping so aggressively and had those drops, and why the dollar pushed up so hard from these pullback lows created, was because the non-farm payroll, the unemployment rate, the JOLTS job opening all had massive rebounds, showing the labor market in the US is having a massive rebound. And what this does and why this increases the value of the US dollar is because that it shows investors that the Federal Reserve, the central bank for the US, is getting closer and closer to rising interest rates or tapering off stimulus support. The more rebounded economic data we have for the US economy month over month, the higher probability of the dollar going continuous bullish and the central bank, Federal Reserve, raising interest rates, stopping stimulus, reversing QE, slowing down asset purchases, and doing all the things that are the opposite to what they did when the pandemic first happened that led to the dollar weakness. All of those factors I just told you guys are also factors that are bearish for gold on the higher time frame. And when you come look at gold on the higher time frame, I'm going to show you guys a quick little cheat code. This is gold in the weekly time frame. Don't worry, majority of you guys won't even remember this shit when the stream's over, okay? When you look at market structure and historical repetition and you look at a timeline here, I'm going to quickly discuss. You can see from 2008 to 2013 was the initial financial crash. 2008, you had this upside move to peak all-time highs due to the financial crash, as well as interest rates being cut during the financial crash and stimulus being executed by the Federal Reserve, similar to what we saw in this stretch of price action, right? Then you start to enter this bearish corrective structure with a baseline around the significant price point. Here it's about 1700s. And what you see is during the period of market fear, let me move this out of the way a bit as here. During this period of market fear, when you have economic uncertainty, you see gold explode in value as a safe haven precious metal because the demand for safe havens increase and the US dollar is weakening during this period, right? All the way until you have years later, the 2008 crash, you have economic recovery. And in this piece of market structure here is what I want to focus on. And when you're looking here, okay, this is when years after you start to have economic recovery and the Federal Reserve start to taper off stimulus support, increase interest rates, and stop quantitative easing, and then you have this massive correction on gold. What is the difference in technicals and fundamentals from what happened at the 2008 financial crash and years later, and what happened when Trump started coming into power, the trade wars, the Iran tensions, and the pandemic? What's the difference technically and fundamentally? Even if I redraw this out for you guys here, right? I'm going to draw the bullish trend that happened during market fear, the bearish corrective structure that started to form here, the stronger bearish structure here, the baseline part, this bounce area, and then this potential downside move to come, if I simply take this piece of market structure here, what's the difference? What is the difference between 2008 and 2020? What's the difference? What's the difference? Mind-blowing, right? Not for the YouTube community. YouTube community is like, what the fuck's going on right now? I have no idea what he even just said. It's the exact same technical and fundamental repetition. All right? Someone said can't see any. Someone said I don't know. You fucking retards. I love you guys. At least you guys bring me some comedy. All right? Anyways, the key is that it's the exact same historical and technical repetition. The next set that I'm waiting for to pretty much project to you guys on the higher time frame is when the Federal Reserve starts to taper off stimulus support, right? When the Federal Reserve starts to taper the stimulus support, starts to raise interest rates, starts to reverse quantitative easing, and the value of the US dollar goes up, what do you guys think is going to happen to gold once it breaks below 1700s here? Do you understand what I'm saying? But anyways, that's just more talking about some higher time frame analysis, some potential long-term projections for you guys regarding the macro fundamentals, and once the Federal Reserve starts to actually increase interest rates and taper off that stimulus support. That is not the intraday trade idea or the scalp trade idea we're looking for. I know you guys don't give a shit about that long-term stuff I just said. You guys just want your quick 10 pip scalp and then, you know what I mean, go spam the chat and stuff. So this is what we're going to be talking about for today. Anyways, so this impulsive move here, and then this drop, which is pretty much a market maker move, on Sunday, right? The scalping for 10 pips is for you guys, you free retards. Most of us in here don't really do that. For you guys, for you hyenas. It's for the hyenas. It's for my fellow hyenas. So this downside moves, these downside moves on gold, you can see that this move came exactly to those 1680 lows, right? It's a very significant price point I was just showing you guys on the higher time frame. Okay, so this was more of a market maker price setup move that we saw happen pretty much on Sunday market open, but it was all pretty much induced because we had extremely strong jobs data. From there, we had buyers jump in the market from that 1680 price point, an aggressive rebound, and now entering more of this consolidation zone, finally breaking above 1739, which is purely I give as much respect as he has for us morons. At least you know you're a moron. You guys gotta relax with the roasts and joking around, like lighten up, you know what I mean? It's a YouTube stream. This isn't the business network. This isn't Bloomberg news reporting. It's just me in my underwear in my room. You know what I mean? Like, it's not like I'm doing a CNN report. I'm in my Fruit of Looms right now, right behind the screen. Look at the respect. Look at the respect my private channel members have for me. This guy comes in every day with the fucked up name. Today it's Jeeve has a small penis. Look at this. Look at this shit. Look at the private channel. You guys gotta lighten up. All right. Look, you guys said look at the private channel. This guy says Jeeve has a small penis today. Yesterday it was something else. I don't even. You know what I mean? Everybody catches roasts. So everybody lighten up. Don't take it so personal. Don't be so emotional. Increase your testosterone and relax. All right? Okay, so let's go back to topic here. let's go look at gold. We're going to be doing gold analysis first. So anyways, what we just saw happen is we've had multiple failures to break these low areas, and then this aggressive upside bounce and bullish market structure developing from these low points and these points so far. We're potentially heading into these intraday highs. We just saw that the US CPI brought dollar weakness, which works hand in hand with gold going up. So that makes sense. For everybody wondering why those inflation figures didn't cause dollar to go up or cause gold to drop, the inflation is still relatively high. It's better than previous, but it's still just on forecast. You have to understand those jobs figures that we saw that had that massive increase in the dollar or that aggressively dropped gold in this fashion, those were like, for example, look at this NFP and employment impact, but look at this CPI impact. It's not like the CPI was extremely high, causing like a 200 pip move to the upside, but it's still not better than forecast, but better than previous. Do you understand what I'm saying? Where the jobs figures were better than previous, better than forecast, and surprisingly better than forecast. Like well above forecast figures. All right? Inflation, if we saw that inflation was better than, so let's go back to the inflation data here. I'll show you guys the difference. The NFP was on Friday, August 6th, correct? So look at this, look at these payroll, look at this jobs figures. Okay? This was last week, Friday, which gave us more signals at the Federal Reserve coming towards tapering. Everything was up from prior, up from forecast as well. We're talking about better than prior, better than forecasted average work week hours. Average earnings were better. Yearly, average earnings monthly were better. Unemployment rate had a surprise. These are all surprise changes as well. You know what I mean? Private payrolls was increased. NFP was increased. Well, ahead of prior, ahead of forecast. Right? Compared to coming to now, where you come and look at the CPI figures, for example, the monthly data had a drop from the prior. That's fine, but it's still on forecast. The actual yearly change, that's the same, 5.4%, but above the expected poll. And then this one is pretty much the same, 4.3%, about a 0.2% drop. It's not as surprisingly amazing economic data as what we saw from the job sector. Do you understand that? Everybody understand that. That's why the impact wasn't as large as well right now. We just went from roughly about 1737 to like 1747. And now with the new 4-hour candle right now, we're just having a minor pullback. But we are going to be in a short-term gold bias above 1739. And if we come above 1747 here. Okay, so what we saw short term is that CPI figure at 8:30 a.m. release caused the US dollar to go down and gold to go up in the short term, right? You can also see that in the headlines here. US dollar falls after CPI data, last down whatever 0.08%. So on gold, this new 4-hour candle looks like it's just going to be grabbing liquidity, and especially with NYSE. If the 4-hour candle just pushes down a bit, grabs liquidity and flips above 1747, clearing above these candle body highs to the left as well, I will start looking for buys up until 1760 area. I don't use Forex Factory, sorry. I'm not sure about like Forex Factory's release or if their forecasts and stuff like that. I have a Reuters Icon terminal, so I'm not too sure about what they do on Forex Factory. I don't know, you know what I mean? It probably is, but I cannot confirm that. So anyways, on gold, if we can break above 1747 on the lower time frame, we're going to start looking for buys above 1747 and 1751. We had a nice hourly candle close here above this range, we're having some nice lower time frame bullish market structure, where even if These are the two high risk. This is the high risk buy area. NYSE either pulls back again, or we come above 1747. I'm looking at these areas with NYSE pullback, or with volume and volatility, or breaks above. Green boxes is where I'm looking for buys. Yeah, Reuters. I don't know if I pronounced it right. I don't know the pronunciation, but I have the icon terminal. Reuters, routers, whatever you guys want to call it. Tomato, potato. Even though nobody says potato, I think. I'm not really in as much of a sell side bias here on gold. Just because of we've already had such strong impulsive moves to start the week. We already had buyers jump back in the market, then these pullback phases, and fail to break any lower than 1721. And that inflation data just brought US dollar weakness, and it's still a short-term bullish factor for gold. So unless we were to come below 1721, I would not be looking for gold sells. I'd only be looking for gold sells if we come below 1721 from current price points and what we just saw happen with CPI. Why was CPI higher impact than NFP? I don't think it was. NFP is over here. CPI is over here. This was last week's NFP to close off the week. It was a pretty aggressive drop with an extremely rebounded economic data. Yeah. Fucking YouTube, man. Fucking YouTube audience. These guys are lost. But I love you guys. Don't worry. Yeah, I'm just going to be marking out this bullish market structure I'm starting to see develop. And we're going to be watching reactions at 1739 and above 1747 for potential buys on gold, as long as we hold this bullish market structure and hold above these previous little intraday candle body price points. For now, this pullback it makes sense because it's the new 4-hour candle setting up, and we're going to be going into NYSE volume shortly as well. But we're going to watch reactions. We're not going to rush any buys right now. We'll watch the reactions accordingly to see if we get some potential scalp ideas. Right now, this is a pretty aggressive bearish candle pullback to here. We might go a bit deeper to the trend line, then come back above, but don't worry about that. Patience, we're still going to be running this New York session into London close hours, like another hour and a half. All right, so no worries, no rush, no FOMO. Let's have patience and wait for those clear-cut confirms, and then we'll take advantage of that. Let's go back to look at our market sentiment indicators. Japanese yen is still relatively flat. US dollar is turning bearish off of that rejection area from previous highs in the US CPI data. Volatility index is flat. Global equity markets are still extremely bullish across all regions. Market optimism still very strong. That means on GJ here, I want to be looking for GJ buys above 153.200. Let me put my PPLs back on. I can't show anybody my secret indicator here, even though I'm showing you guys it. Yo, Gabriel, don't approve these people for this indicator. Let me put my PPL indicator back on. Yeah, you guys like that, don't you, eh? Whoa, what are these? Anyways, GJ. When we zoom out here, I've shown you guys hundreds and hundreds of times, but it doesn't hurt to rinse and repeat. What GJ is extremely bullish on the higher time frames ever since the pandemic crash. We had a pullback from these highs come all the way down to this previous demanded price point, where this is where bullish market structure was last revisited, that brought us into these new highs printed by buyers, right? From these new highs printed by buyers at the start of the new quarterly candle period, the start of a whole new business quarter, we had a aggressive pullback phase bring us right to those demanded price points and fail to break higher. Now you can see we still have this corrective bearish market structure, but we're starting to break above it. For anybody who follows me, what is my higher time frame GJ target from current price points? Where am I trying to revisit? I'm not during this session, but just like over the course of maybe the next days or weeks. YouTube said up to the moon. Come on. No, why 153.4, 156, correct. The last previous highs is what I want to target in the higher time frames over the next days or weeks. You know what I mean? At least the last highs, because that's how the market trends. You can only have two things, regardless if it's a commodity, regardless if it's a precious metal, a currency. If you're having a bullish trend, it's only going up in two ways. Buyers enter from a demanded price point and push that trading instrument up. They take profit once they reach a determined price point of interest at a supply zone. Sellers jump in to relieve them out of the market, creating a pullback phase. And then you continue back up when buyers jump in from better price points. Or you have consolidation zones, order blocks, and continuations back up. This is all, if you have a bullish structure or trend on any currency pair, on any currency, commodity, stock market, that's all you're going to see with market structure. Okay? That's all we saw with GJ over the last year. So overall, I'm bullish on GJ. Here, what I'm essentially looking at is from that demanded price point, this bullish market structure and the break of this corrective structure. And once we break above 153.200, very nice safe buys, especially with the confluences of Japanese yen weakness and UK stock markets being very bullish. Japanese yen weakness here just shows us that the secondary in the quote is still bearish, which gives us more confirms for British pound strength against the yen. And then also when you come here and see UK stock markets continuously pumping into all-time highs, it doesn't show you that GBP individually is going to be extremely strong, but it shows you that there's still a lot of optimism and a lot of confidence by investors within the UK markets. So there's a higher probability of GJ also being bullish as well. Does that make sense for everybody? But we can't safely buy until we break out of this intraday order block, break above these highs in this price sensitivity area to the left, and then we can start to take some scalp buys above 153.200. Okay? So on the intraday time frames, we can see that GJ is in a consolidation zone. Does this consolidation zone on GJ mean we start to sell? Does this consolidation zone mean a resistance? No, it doesn't, right? Because when you zoom out again and you look at market structure and price action, what if you were starting to call this here a consolidation zone in resistance? There's too many technical traders that try to call tops and try to call bottoms and say something is too high. Here's very similar situation. Consolidation zone, consolidation zone. Instead of having pullback phases, you have your upside move pullback here. Consolidation zone, break out into new highs. Consolidation zone, break out into new highs until you have a more aggressive pullback phase during that during the new quarterly candle setup. Okay? So now that we're still extremely bullish on GJ, I don't want to say that this consolidation zone that's developing here on the intraday time frames is showing us a sell. I'm still in a bullish bias. All I'm seeing here is orders being collected. Unless we break the downside of the consolidation zone, that is the only time similar to here where you can expect a deeper pullback to have buyers get in from better price points. Until then, within this order block, I am bullish. If we come down to 152.8, high risk, high reward buys at the low of the consolidation zone. If we break above 153.2, buys. As long as Japanese yen individually stays bearish, as long as we hold this consolidation zone in market structure and we hold these price points and UK equity markets are still hot, still very bullish, I'm looking for buys in these areas on GJ. above 153.2, even a deeper pullback to 0.800, I'm still looking for buys on GJ. Okay? I would only be looking for GJ sells if we broke and retested below 152.500. That would be breaking below the consolidation zone. That would be showing me two things, all right? When I mark out the consolidation zone and we fail to break the highs of the consolidation zone multiple times, that does start to show buyers exhaustion. But when you break the lows, it starts to show a lot more sellers pressure and sellers orders entering the market, as well as buyers exiting, to give you that deeper pullback phase that can take place to potentially revisit prior lows. I would only be selling GJ with multiple rejections at the highs, a break below the order block, a break below 152.5, and individual Japanese yen strength. Do we have any of those confirms yet? Have we broke below the order block yet? Have we broke below 152.5? Is Japanese yen bullish? Is UK equity markets bearish? No, right? So I'm going to stick to my buy bias as long as the fundamentals are still in play. I'm not going to let a technical resistance tell me it's time to start selling, or say, "Oh, this is too high right now." That just doesn't make sense. Right? And it doesn't make sense. It's not going to make you no money on your penny lots. Play with the trend. The trend is your friend. So, GJ again, break above 153.200 buys, 152.8 buys as well. No, we have not broken down USD CAD yet. We're going to go to that next, actually. We did gold so far in GJ analysis. If you guys want to see the gold in GJ analysis, just reverse a bit out of here. 153 as well, Alex, but I'm not really liking all this price sensitivity and how some of these aggressive wicks come below. So I don't want us to take a scalp at 153. It dumps like a quick 10 pips, then comes back above, where that would be a scalper stop loss. And I'm not liking all those wicks. It's nice how the candle bodies keep closing above. That's fine. But I'm not liking how we have these 10, 15 pip wicks that come below there and could quickly spike people out, right? Yeah, US 30, we were looking for buys from a 35-200 retest, which we did get overnight in this new daily candle above the order block. What the fuck is this? Same thing with US 30 here. Do you see? Okay, I want to show you guys the same example on US 30 about market structure, okay? Remember how I was just telling you guys market structure on GJ? How you only have pullback phases, consolidation zones, and continuations up, upside move, pullback, continuation up, upside move, consolidation zone, continuation up. What do you see has been happening on Euro USD for the last year with support of the central bank, with support of the central bank support? I don't know why I just said that in the weirdest way. Support of the central bank support. The fuck is stimulus done by the Federal Reserve into the US economy? Gave myself a tongue twister for no reason. All you've seen is buyers print highs, pullback phases, and continuations to the upside. Consolidation zones and continuations to the upside. Pullback phases, continuations to the upside. Pullback phase, continuation, consolidation zone, breakout. Keep it simple, ladies and gents. It doesn't matter if it's a currency pair. It doesn't matter if it's a stock market. It doesn't matter if it's gold, a precious metal. It doesn't matter if it's oil, a commodity. The market moves in the same fashion. That's why here, you know how many people were starting to sell US 30 here? Q Banks was. That retard Q Banks was. You know why he was trying to sell it? Because it hits a Fibonacci. It hit a golden fib. It's so high. And oh, a resistance is forming. A resistance is forming. That's what technical only traders do. They don't realize the stock market's only been trending bullish. You know what I mean? I think I sent that in banter chat. You guys want to see his scaling? Let's go back here. Let's expose the Miami mans. This is recently. Scale. Q Banks sell at 35,200. He was selling. No stop loss. Scale, 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 no stop loss. So this should be bankrupt by now. But guess what? He's gonna say, no, we jumped in buys. We switched over because the Fibonacci and RSI lined up and it was looking like buys were coming back. Nah, these guys are retards. These Miami marketers are retards. Why would you sell the US stock market? Why would you sell the US stock market? For what reason? You know why they sold it? Because they saw a resistance forming here. That's why. They saw a resistance forming. They don't have stop losses, and now we're at all-time highs, new all-time highs being printed. If you guys want a great webinar that will tell you why the stock market has been so bullish fundamentally, and why the dollar has been so bearish, and why gold has been doing what it's doing, go watch this pandemic and central bank timeline analysis. All right. Go watch the pandemic and central bank timeline analysis webinar. It'll teach you everything you need to know about the Federal Reserve's actions, historical repetition. Stimulus, I mean all the forms of stimulus that they did during the pandemic, which was the checks given to the public, which came from the US money supply, which was the buying assets and securities, which is obviously quantitative easing, the purchases of government bonds, which is similar to what you just said there, and then obviously the decreasing of interest rates, which led to the stock market being so bullish. One of the reasons the housing market is so bullish is because interest rates have been so low as well, you know? But that's all explained in here further as well, Jack John. And it's an hour-and-a-half webinar just about that topic. Why are people afraid of fundamentals? Because you have to use your brain. And people don't like to use their brain anymore. They want to just be handed things. Okay, GJ analysis, we went through there. All right, GBP USD. So now we had this very aggressive rebound here on GBP USD from these lows printed. The dollar has some short-term weakness as well. I would like a pullback to 385 and some buys up to 389 to retest this bearish market structure and this channel we have been playing in for the last couple of weeks. So with the short-term weakness on the okay, now I got a pop quiz. Right? I got a pop quiz for everybody. Even though US dollar is the secondary in this quote, even though the US dollar is the secondary in this quote, why did it have more power than euro, and why did it have more power than GBP? Even though it's a secondary in the currency quote, why did the US dollar have more power than the British pound in terms of its movement? How come whenever there's something individually impacting the dollar, for everybody who says because it's the world's reserve currency, you are correct. 90% of global business, import and export, as well as bank-to-bank transfers is still done in US dollars. It is still the world's reserve currency and business currency. It's still the petrodollar as well. Yes, it's a safe haven, but that's not the reason why it holds more power against other currencies. It's because it's the world's reserve currency. It's still the global business currency. Majority of global business, import and export for products, majority of oil export and import, majority of bank-to-bank transactions are still exchanged back into the dollar or done within the dollar. For example, that's why if I come here on the terminal and I show you guys this, I'm going to show you guys something. So this is Asian spot prices, right? This is different contributors in banks. This is different locations around the world. You have Barclays, Santander's, Reuters, JP Morgan, NBS, banks all over the world. This is updating every millisecond on their bid and asks price from an institutional perspective, right? Every second, every millisecond, it's changing. But when you look at the left here, you don't see any currency pairs. You see the individual currencies, and they're automatically priced in against the dollar. Like, for example, this is UCAD's price. This is NZD USD. This is AUD USD. This is GBP USD's price. 3854, 3856. Right? You can see every single time there's deals going on, every single second. The location of the banks is changing every single second. London, New York City, Hong Kong, freaking Thailand, wherever it's going to be. The contributor to those bid and ask prices is changing every single second from banks around the world. But the currencies themselves, the banks aren't trading these individual currency pairs, let's just say. They trade the currencies themselves, and they're primarily valued against the dollar. This is just an example of Asian spots. All right, can we use this information to trade and take trades as retail traders? No, we can't. There's nothing we can take away from this to say, oh, I'm going to take a GU trade right now. I'm just giving you guys an example of bank-to-bank transactions is usually done in the US dollar. All currencies are usually graded against the US dollar on the main stage. I don't know, I was just saying, like, freaking everywhere. Thailand, everywhere. Like, just... Okay, so that's just further proof of the U.S. If you can't already Google it yourself, of the U.S. dollar being the world's reserve currency. All right. So, anyways, that's why when the CPI data came out, after failing to break these lows and a new low being printed, the CPI data led to the dollar weakening. So pairs like GU and Euro USD pushed up, and pairs like USD CAD pushed down. Also, guys, I'm looking for sells on UCAD below 1.25 setting up shortly, going into NYSE hours. I just wanted to say that because it's setting up now shortly. All right. Below this price sensitivity area here, if dollar continues to do that pullback and the CPI data has further effect, I want to start taking 50 pip sells on UCAD to potentially revisit these lows to the left here. But just be cautious. Don't rush the UCAD sells because in 4 minutes we have NYSE Open. All right. But anyways, right now in the short term, because of the CPI data, we're having the dollar decline. If the dollar pullback continues to the next zone I expect it to, then we can use that to our advantage for the UCAD sells below 1.25, GBP USD buys at 1.385, and Euro USD buys, I'm going to be looking in this, a break of this zone out at around 1.387, 1.384. Okay? Now let's just wait for NYSE to open. Let the pullbacks from the New York Stock Exchange open happen. And then we're going to be looking at the lower time frame for entry points. If dollar continues bearish with that CPI data, Euro USD does a quick pullback, comes back above here. We're going to be looking to take advantage of this range on Euro USD as long as dollar stays bearish for the remainder of the New York session. We're going to be looking to take advantage of UCAD sells below 1.25. GBP USD buys at a 3.5 retest or from 3.6 area. Gold buys. Oh, gold already freaking did that 39 retest and had a nice jump. I don't know if anybody jumped in that on your own accord. But gold had a beautiful reaction on the 1 minute time frame at 1739 after these weaker bullish candles and aggressive bullish engulfing bearish pullback here. But we'll see what NYSE still brings us. Did anybody take those gold buys from 1739 retest? Otherwise, no FOMO. We have NYSE in a few minutes. Yeah, we didn't get a double bottom or an order block. Just some decent price action with the candle closing above 1739. And then some bullish candles closing with that little retest. If you guys got to catch some gold scalps here from 1739, I would secure some partials so you don't get caught in an NYSE pullback. It's looking like we're going to get a nice hourly candle close, 30-minute candle close here, but I would secure some partials, all right? I didn't get to take it. I didn't get to enter it because I was obviously giving analysis on the other pairs, you know what I mean? So next set of gold buys is going to be if we come above 1747 now. You already took trades 5 minutes after the news. Oh, I thought you said you already took 5 trades. I was like, yo, relax. If you guys took this, that's a great buy on your own accord following the capital hungry analysis and the key level retest and reaction on the dot. No, I wouldn't have taken it with the 1 minute tap. I would have taken it either on this bullish candle or this bearish pullback. Maybe high risk on the if you close above, but I would have taken it somewhere in this region around 1739.5 to 1740.5. The bearish pullback because this is showing me we stopped above the key level after having this impulsive break and retest. We're still multiple closures above the key level. Bullish engulfing, if you want to enter after that, you would have to deal with the pullback, but the pullback makes the most sense. I'd be waiting for the pullback, or even after this bullish candle here too. You still get a nice scalp squeeze of almost 40 pips, right? So now we have NYSE Open right here. So this 30-minute candle is opening up first without an upper wick. That's good. If this 30-minute can just make a lower wick and then start to flip bullish and come above 1747, that's the next set of buys we're looking for. Hopefully you guys who took the 1739 buys as scalpers secured some partial positions and leave your runners risk-free to remove your risk out of the market and have less stress, less fear, and less anxiety as an emotional retail trader. Okay? The next set of buys, if you didn't get to catch those buys, is going to be above 1747 if we have that continued dollar weakness momentum carry into the remainder of the New York session, going into London session close, which it does look like it's going to do. All right? Yeah, if that you're not always going to get exact double bottoms. I just like to look at the candles in relations to the size. And after seeing this bullish bounce off there and a weaker bearish candle, it's starting to look like a stronger reaction, right? Like, I know you guys are looking for more something like this exactly, but to me, that's like, you're not always going to get that on the point double bottom, or the fact that this bearish candle was weaker than the bullish push was enough to show me exhaustion signs at 1739. And it's not like I told you guys I would enter right at 1739 as well. I would enter here, here, or even here, and still catch this range. You know what I mean? As a scalper, even if you're looking to take that trade as a scalper and you waited for those bullish engulfings, that's still 50 pips, but you'd want to at least target the previous highs in the 1 minute, right? And you'd still have a very moderate stop loss. It's still a 1 to 3 RR. You're not always going to get an exact double bottom, an exact order block, you know? But anyways, so the next set of the next set of gold buys is only going to be if we come above 1747 now. Where's my alert here? Let me make sure the sound is off. So we're going to let that cook, all right? GJ, I like how this 30-minute candle did a pullback and retest. We still have all this liquidity generated here, failing to break higher. I hope today's the day we come above 0.200. It can take some nice impulsive buys above 0.200. Otherwise, no entries yet on GJ. Why do you scalp? I primarily take intraday trades. So I like to take 1 to 3 risk versus reward trades, roughly with like, let's just say a 20 pip stop loss and a 60 to 80 pip take profit. These are more intraday trades and day trades that can play out over potentially hours or through an entire session or two. And I only trade myself on Tuesdays, Wednesdays, and Thursdays, and only want to take a maximum of 5 trades a week. Like a 5 trade a week strike rule. I just do these scalping sessions because I run a service in the trading industry with Capital Hungry. And within Capital Hungry, we have hundreds of members who all have different trading styles, whether it be positional trading, swing trading, scalping, or intraday trading. And also me, I haven't even traded the last 2 weeks because I don't know if you guys remember, I used to do London trading sessions. I was always doing the London streams and I always traded London, but I'm from Toronto, Canada. I'm from Ontario, Canada, like in an Eastern time zone. So it really started to weigh on my health and on my lifestyle of always being awake at night and sleeping during the day. Like I was missing stuff with friends and family. You know what I mean? I was the one who's always doing shit at night, going to the gym at night, eating at night. My whole schedule was shifted, right? But now, because I'm getting older and I want to, I am starting to think about having a family and stuff like that in the next couple of years, that I can't keep on that same schedule of going to sleep when the sun is up and being awake during all hours of the night and trading London. So for the last couple of weeks, I've been trying to shift my lifestyle and schedule back to a New York schedule, but it's been hard. You know what I mean? It's been hard. I've been sleeping like shit. I've been eating at off times. Like it hasn't been pretty. But hey, it is what it is. Everything takes time to break a lifestyle or habit or a pattern. Any pattern you may have in your life, whether it's a good pattern or a bad pattern, it's going to take some time to change that. Also, I was used to a night shift, not just because I was doing it for trading, but somebody asked what bank I used to work for. I used to work for Royal Bank of Canada in global operations, and tech and financial tech industry, right? So with that, I was doing a lot of night shifts because every 2 weeks out of the month, I would be watching banking systems in Asia and in UK, right? So I got used to a night shift there, and I got used to studying the markets overnight and trading London session while I was working as well. And then that sort of stuck with me even after I left my job. But now I'm trying to switch back to a normal New York trading session and just have a normal lifestyle, you know? Give me 1 second here. I'm just getting a phone call. Give me 1 second. Sorry, yo. I thought it was my accountant, but it was just a fucking scammer. Alright. So yeah, that's why now I'm doing the New York trading sessions, is because, man's getting older, and stuff like family, friends has value to me, you know? I missed out. You guys gotta understand. The reason Capital Hungry Business exists and the reason people, I guess, listen to my analysis and information on the markets is because for a good 5 years, I didn't do fucking shit in my life except for work and study the markets and go through a trial and error trading. All I did was have my relationship, work out, work, and markets. That's it for a good 3 to 5 years. I wasn't doing anything social. You know what I mean? I wasn't doing anything social. I wasn't going out. Wasn't going on any vacations. Wasn't going on any trips. That's all I did. So through that rinsing and repeating of certain concepts fundamentally and technically, back testing the charts, studying fundamentals, that's how I learned so much to get to where I am. You know what I mean? But it took a huge toll on my social life, personal life, family life, and I lost a lot of friends through that process. I got a lot of family hate through that process. I got a lot of jealousy and envy when the money started coming in through that process. But that's just the way it is, you know what I mean? People you think are supporting you usually are hoping, preying on your downfall. Just because they're not where they want to be in life, you know? But anyways, it is what it is. So right now it's 9:40 a.m. Eastern. US 30 just keeps pumping up to all-time highs. I hope you guys took those 35-200 buys we were calling last night. It was a private chat. Some of you guys better took that trade. We were fine. We were waiting for this breakout of this consolidation zone for so long, and I told you guys last night it looks like it's coming. Did I not? Did I not tell you guys the last market update that breakout's coming? Yeah, I'm now doing New York sessions within the private channel and on YouTube. It's just going to be New York sessions. Someone said GJ melting. Why do I listen to the YouTube comments? Always got me changing screens and shit. How can your YouTube followers get a discount on the Capital Hungry private channel? If you can't afford $3 a day or the $110 a month, just don't join. You know what I mean? Don't even trade. There's way too much offered in Capital Hungry, and it's already way too cheap. A year of Capital Hungry is probably like $1,200 something, and people pay $5,000 for like a day with Q Banks. People pay 5Gs for like, you know what I mean? So I'm not here to disrespect you, but if you do not have the disposable income to trade, please go get a job and just go save some disposable income. Go work 2 jobs if you need to. I've been working since I was 15. I've worked in lumber yards. I've worked in chemical plants, restaurants. I was a dishwasher on the line. I was a line cook. I worked in factories, cookie making factories. Worked everywhere. Corporate offices. You know what I mean? Let's start looking at GJ2 if it comes above 0.200 here. Start taking some buy scalps on GJ if we break above. Any 1 minute closures on above 153.2 for impulsive entries. If we hold above 153.2, and then potential retest double bottom entries as well. The banking was after, like, all those other jobs were from roughly when I was like 15 to like early 20s while I was still in school. The bank job was after college and stuff like that. All right, GJ starting to look good here for some potential scalp buys setting up here. Above 0.200, especially if we start to clear above those 10 pip areas to the left. And as long as we don't have any bearish engulfing closes back below 153.2. UCAD sells are not ready yet. GU buys are running. Gold's coming back to 1739. It failed to break those highs, so it was a nice scalp here. Gold gave a nice scalp from 1739 to roughly almost 1747, but no further buys above 47. And it was just this buy scalp that we got to take advantage of. but we didn't get enough volatility to break above these previous price sensitivity areas to the left yet. All right. So it was a nice first buy play that we took advantage of on gold with the 1739 retest back to those high points here to the left, but not enough buyers order flow to break above that price sensitivity area yet. GU gave the 38500 retest and is already starting to continue up here. Euro USD, we're waiting for some more confirms above 1.174 for further buys. But dollar, let's watch dollar movement here. Dollar still relatively bearish. That's all good. Okay, now with GJ. Nice bullish candle, very nice price action, nice minor bearish candle. As long as we don't have any bearish engulfings back below 153.200, we should still keep chugging our way to the upside. When you're looking at the 1 minute price action now though, you do need 1 minute closures above these wicks to see a continued move to the upside, okay? If you do not have that and you have a bearish engulfing back to 0.200, I would trade manage and get out of the trade. Because what I want to show you guys is we're breaking above 0.200, but we've had these rejections here before on the 1 minute time frame in this area. So still bearish candle, but still closing above 0.200. It didn't engulf the previous bullish yet. But if this candle still holds above 0.200, it's still all good. But you need to break above these highs to extend the trade. And if we come back below 0.200, close the trade out and just and trade manage accordingly. You know what I mean? I'm not liking that. Stay out of GJ for now. I'm not liking if this candle closes with a weaker bullish body like this. After this rejection here, it shows me that the next candle has higher probability of going deeper bearish. It's not showing me the strongest bullish price action there. We're going to have to wait for a better setup on GJ. I'm not liking the price action as much so far with that weaker bullish candle. That was a nice, oh, we still closed above 0.200, but if this candle doesn't break above these highs, I would get out of the trade. If we don't close above these highs, then get out of the trade, and if we close above 0.200, get out of the trade, or trade manage it out. That's a lot. We need to close above. YouTube is getting a discount already? Yeah, that's true. YouTube already getting a discount. Don't touch gold now. Let's just wait for better gold setups. We had the nice intraday play on gold in terms of this price action here, an upside play, but you can see we're struggling to break these 1747 highs, and especially when you're looking to the left here as well, right? So this was a nice range. It was almost a 40 to 70 pips depending where you entered on. But not enough order flow for the secondary set of buys above 1747, right? GJ is looking much better now with this bullish candle close above these bodies and holding at 0.200 still. But watch this to the left. You have to break above. You have to break above these highs of the left still to continue up. Otherwise, if we reject 0.300 again, there is high potential when you're looking at the intraday time frames that we can create a wick in this area and come back down. But so far, it's looking a lot better. No, I'm not in no gold sells. I'm not in a gold sell bias. Gold still. I'm still in a bullish bias on gold. Yeah, looks like GJ struggling at those previous 1 minute highs to the left I was showing you guys, and still rejecting that same area. You got out of GJ? That's okay. We're probably gonna have to get out here too at 0.200 on this candle and trade manage out, because we're rejecting that previous high to the left so far still. But it's all good if you got out. At least you didn't take a loss or anything like that. We're still holding above 0.200, just not the cleanest price action and volume and volatility on GJ. Obviously, I'm still in a bullish bias. We're not looking for GJ sells. Just not the cleanest price action above these highs at the moment. We'll probably get cleaner price action going into London close like we've seen. Yeah, and gold, I'm not in a gold sell bias at all. I'm still in a bullish bias on gold. We just, like, there's nothing you can do when you fail to break these high points and you have sort of these whipsaw plays, right? So here, nice breakout, nice buys we took here, but we failed to break 1747 in those highs to the left. We don't have enough order flow to break above there, so you have this bit of a pullback phase. Why was there a spike at market open on what? Yeah, no UCAD sells yet. That's going to be below 1.25. Those confirms aren't ready yet. Euro USD buys are setting up shortly. GU buys are active, but only for 10 pips. And GJ, we were looking for 0.200 buys, but it's not the cleanest price action above 0.200 for the time being. We're not seeing like any strong bullish candles. So it's all good there. It looks like only gold is really the play today. And I do not want to take another gold buy in this area again because we have the new hourly candle coming up. So I could see the new hourly candle retesting bullish structure, then continuing back up. And GJ, just stay out of GJ. It's not like we really had any loss or anything here. We've just been ranging at 0.200. Not the cleanest price action for the time being. We'll wait for the new hourly candles and going into London close to get better positions. This price action here was it was showing us a nice breakout here, right? Breakout, retest, starting to continue up. But then you're getting a mix of bullish and bearish candles in equal size while also failing to break that price sensitivity area to the left and coming too close to a new hourly candle. So worst case, you took like a break even or a 2 pip loss on GJ, trade managing on the 1 minute, and we'll get potential better entries within the new hourly candle setup going into London close to either recover that loss or just stay out if you got break even there. If you got the gold buys, then you're still all good. Not like if you're holding them. I mean, if you caught these gold buys, then you're laughing. Yeah, don't forget your mentor reminders, everybody. I just have to go to the washroom real quick so you guys can watch this. So you guys can watch this quick ad. Okay, I'm back. So GJ, like I was showing you guys, the price action wasn't the cleanest here. We trade managed out around 0.200 instead of having to deal with this 6 pip loss. If you took a GJ, someone said fuck GJ melting. If you took that GJ buy that we attempted, worst case you got taken out at break even or a 3 pip loss. It is what it is. We tried to take the buys above the highs. Initial price action here looked really good with this breakout candle, bullish pullback, and then the pullbacks here as well weren't looking too bad. But then you started to get this rejection around those previous highs to the left, and especially that you're getting these mix of stronger bearish candles and weaker bullish candles here as well. And then you have this candle breaking and retesting below. We're not in a GJ sell bias. We're not going to switch to GJ sells. We're going to wait for the new hourly candle to see if we can get better buys on the same trade idea without emotions involved to either recover that minor loss and still follow our same analysis. Our analysis on GJ buys is still valid. Volume and volatility as well as price action didn't allow for it to play out as we wanted it to. Because of that, as scalpers observing the price action, it was best to remove emotions, trade manage at a break even or a 2 to 3 pip loss, and come back fresh during a potential better setup, which can be during the new hourly candle. All right. So we're seeing that this hourly candle is still going to be closing within this range, not breaking out to the upside yet. We're still only going to be taking further GJ buy attempts if the next hourly candle going into London close does the same break and retest, but we have much cleaner price action. If we do get those confirms, remember, the next scalp trade you're potentially taking advantage of is from 0.200 to 0.500. It's a 20 to 30 pip range, right? Which is going to be much better. Than the loss you just potentially took of 2 to 3 pips. UCAD, the sells were not ready. We're still reacting to those low price points and having a bounce here. But I'm not going to say that like, oh, start to buy UCAD here. Start to jump in UCAD buys, right? We had a pretty aggressive rejection here. Downside play, pullback, downside play. Reacted at these previous lows. And dollar still short-term bearish from the CPI data. All right? So I don't want to switch. You just added another sell to US 30. Iron Man, what are you doing? What? You've been selling US 30, Iron Man? Why? Are you joking? Why did I just read that as the last comment? Has to be a troll, right? But anyways, so it was it's much better that but anyways, guys, losses in trading are inevitable. Losses happen. It's unavoidable. The whole point is how you manage the loss, how you handle the emotions, and how you come back and recover potentially, but not right away. You don't want a revenge trade. So it's much better that we looked at the trade managing areas here rather than continuing to hold and taking a potential 10 pip loss here. You get what I'm saying? We already saw that the price action wasn't clean. We already were in potential entries, but we didn't get the clean price action we needed to extend the trades higher. So it's better to take that break even or 2 to 3 pip loss than to hold the trade emotionally and take a 10 pip loss. Fair enough? And also, like Carl said, we do have the UK GDP tomorrow. So today, so far, to summarize, gold 1739 post CPI buys for 40 to 70 pips. W GJ loss above 0.200 for break even to 5 pips loss. All right, that's what we got so far today. Oh, shit. Iron Man's not joking, guys. Iron Man, why are you taking sells on US 30? You're not joking? What's your reasoning for this? Hey, Jav. Jav. Alright, anyways, guys, this is what we have for our New York trading session so far. This is the trades we potentially executed on and the results of it so far, alright? The first trade we called out was after CPI weakened the dollar. We had a retest of 1739 in this area. And if you took buys anywhere from these bullish candles here at the worst case, still a 50 pip upside to the previous 1 minute highs. We're actually still holding 1739 here with some pretty solid price action, okay? That was trade number 1 called out on the New York trading stream. Trade number 2 that was called out was GJ buys above 0.200. Here. We had nice price action with the break. We had nice retest here. Then we didn't break those previous highs. We got a mix of bullish and bearish candles, and we trade managed out of that. So any questions? GJ loss, break even to 5 pips. And on GJ, we also trade managed accordingly, where it was a much better loss than what could have potentially happened if you kept holding the trade. You know what I mean? It could have been a 13 pip loss. So it is what it is. GJ still in this range. New hourly candle just opened up. It's still just stuck in this range. If we break above 0.200, we'll take one more attempt on GJ. And if we break above 17, this was a nice little order block too, man. And if we break above 1747 on gold, we'll take some further gold buy scalps as well, all right? Now we're going to be watching the markets for the next 30 minutes going into London close hours. Headlines are pretty quiet so far as well. Anybody got any questions about the gold trade we called out or the GJ trade we called out and the results behind that? Otherwise, now we're still waiting for safer Euro USD buys above 1.74. We're still waiting for UCAD sells below 1.25 or the retest of 253. But it looks like dollar starting to have a bit of a bounce from its lows as well, but nothing out of the ordinary. We didn't execute anything on Euro USD or UCAD because we didn't have the price action confirms or what we needed to see to execute on those pairs. We executed on gold. We executed on GJ. Gold went to a win. GJ resulted in a loss. Headlines have been very quiet through New York session. All we had was the CPI data, which brought a little bit of short-term dollar weakness and some bulls on gold, but nothing really that's going to be past like short-lived status. You know what I mean? Yes. Why gold trade do not need to wait for which one are you talking about on gold? No, I wouldn't enter on the initial taps here. That's why I put the range from up here. Like the entry potential range. Worst case, if you're entering after these bullish engulfing candles, you still like it's still a valid setup with the price action. This, to me, might as well be a double bottom or pullback. Do you understand what I'm saying? Just because it didn't come directly to retest 1739 twice in a on point exact on the dot double bottom doesn't mean that when you zoom out here, remember, gold's having an upside stretch and has been bullish from those lows. You have this impulsive play from data and then a very aggressive pullback that holds 1739. that candle closes above 1739. Then consecutive closures above 1739. And then, I didn't say like the buys were from 1739 right off the bat, because that wouldn't be realistic in these 3-minute candles, right? You'd be like, okay, we just had a very strong bearish candle and 2 weak bullish candles. This could dig deeper. Maybe I don't want to enter there. That's perfectly fine. But then, after having 3 candles close above 1739, you have this bullish push and a weaker bearish pullback and another bullish push breaking above those bodies. Whether you want to enter on that bullish push whether you wanted to enter. Fucking Iron Man said thank you for the 40 points on US 30 as it went up 500 points. You gotta be a fucking retard. 17 years of retardation. I gotta tell you the truth, man. Clay, you gotta fucking get your head on right. 17 years of fighting the trend. No wonder you're so stressed out. Come on, man. It just went up 400 points, you watched it, and you're talking about 40 points on a pullback. What are you doing? Oh man. Anyways, so that wouldn't be the entry point. It's not like it'd be different if this bearish candle came down to here but left a wick and half a body, and then you get some bullish candles rejecting. Then I'd say, all right, right at 1739 entries are fine. Do you guys get what I'm saying? Like if you had a candle wick down to here but close with half the body size and then some bullish retests, I would say enter right at 1739. But here you have a very aggressive bearish candle and weaker bullish candles, so you don't want to enter right away there because it's not the cleanest price action. But the validation you do have so far is we're holding above 1739. Then you get this bullish push. You can either enter on the breakout of the bullish push or wait for the pullback with your stops below the key level now. That's why I said the gold win was roughly 40 pips of a win. I didn't say it was straight from 1739 to 47. You know what I mean? This is much cleaner. Like if we were paying attention to gold, this is actually much cleaner with this little order block formed here for that scalp squeeze. Now, the reason why I said Paul Harris just asked a very good question. Paul Harris said, Jeev, can you explain when gold came back to 1739, why we didn't take buys again? Let me explain, okay? Number one, first zoom out on the hourly and intraday time frames, all right? We have to see that this is a previous price sensitivity area high to the left, okay? The first initial breakout with 1739 with the CPI data came up to there and failed to break. Then we had that pullback trade go up to there and fail to break. Okay? So what I am seeing is this was attempt number one. CPI data came up to 1747, previous highs. Number one, failure to break here. Then we had this pullback at 1739, which was fine. That buy idea called. Second time failing to break there. My anticipation is showing me that buyers are struggling to break above this price point. So what my anticipation is if we were to come back down to 1739 again, I see a higher probability of breaking below 1739 and doing a deeper pullback to get buyers in from better price points to have more buyer order flow to break those highs. So my logic is not that gold is a sell, but after having multiple rejections at those same highs to the left and the 1747 key level, my anticipation was with this bearish aggressive price action as well, that there's going to be higher probability to dig a bit deeper and have a deeper pullback before we continue up. That's why I did not advise buys on the second retest of 1739, but the price action was actually a lot cleaner, but we were looking at GJ. So when this was taking place, we were looking at GJ as well. You know what I mean? So when I saw that this first attempt didn't break 1747, this second attempt didn't break 1747, I did not want to call another 1739 buy in case we get a deeper pullback. which would make sense. Buyers exhaust from those highs and fail to break to the left there. They fail to break here. They fail to break here again. If they start to take profit out of the market, you're going to get a deeper pullback phase, right? And when you're looking at gold structure on the intraday time frames, gold could have easily rejected these highs, pulled back to 1736 or 1735, and then continued up. As a scalper, do you want to hold potentially 40 to 50 pips of drawdown? Probably not, right? So that's what I was more looking at. I was looking at the rejections here. I was looking at CPI failing to break here. I was looking at the second attempt after that failing to break above there again. So I didn't want to say, hey, we're going to bounce off 1739 again. It didn't look as high probability to me. The fact that it bounced off there again, hey, it just happened to happen that way. I didn't call that secondary buy there again. For the reasons I just told you guys, okay? The same time, dollar was starting to have a little bit of a bounce too. GJ as well, back in the range. It's much better now. Don't you guys also now, when you took that 2 pip loss, feel better instead of taking a 20 pip loss, a 10 pip loss? Trade managing based on the 1 minute price action, handling your emotions, right? Because let me give you an example, Paul, for something like on GJ, for example, right? Let's look at the intraday time frames here. Okay? Highs printed. From these highs, we fail to break, you have a pullback phase. You go all the way back to those highs again and fail to break, resulting in an even deeper pullback phase. Right? Let's look at US 30, or let's look at gold for an example at other areas of interest. Let's come up here. 4-hour time frame. Look at the structure. See here? Let's look at when we're moving in bullish market structure. Look at gold here. Just because you reach a high point doesn't mean you're going to break above it. Look at gold here. Look at how many times these highs were tested and you fail to break, and you have these pullback phases that run hundreds and hundreds of pips, still maintain overall bullish market structure, then you break above. And this is the more specific example I want to give you, right? You have highs printed here. You have these very minor pullback phases and failures to break multiple times. After having that multiple times failure to break, you have a much deeper aggressive pullback phase, getting buyers in from better price points, then continuing to the upside. What I'm trying to tell you is, every time you go to reach a previous high does not mean you're going to break it. Okay? And if you have multiple rejections at a high and failure to break, and then you break below that price sensitivity area, there's a higher probability of a deeper pullback to come. For example, here, three retests of that high and failure to break until you finally had a deeper pullback, then went back to that high, still failed to break, deeper pullback. Okay? So when I'm looking at gold here, I was watching that this was an intraday high printed. We failed to break. We failed to break there again. Coming here, CPI, we failed to break. The secondary attempt, we failed to break there again. That's why I said, what would be the next set of safer buys on gold? The next set of safer buys would have been above 1747 now. You know that once you break above 1747 and have intraday candle closures, that you're going to have that next impulsive upside move. Okay? Right now, gold is just back in this range. We had a nice reaction at 1739, but still nothing too crazy happening there. All right. GJ is just ranging. GJ is just in this range, being annoying, but it is what it is. We kept our emotions out. We trade managed accordingly. We accepted that break even and 2 to 5 pip loss on GJ. It is what it is. It looked like we were fine. And what I was anticipating on GJ for the breakout was Japanese yen was weak. We had all this liquidity generating over the last few sessions, and we were finally starting to break those highs. That's why I was expecting the next set of impulsive moves to 153.500. All right. So the shitty part was, what would have showed us much more buyer's momentum is if that intraday hourly candle closed above 0.200. If that hourly candle closed above 0.200, we would have kept holding those buy trades, anticipating a pullback and continuation up. Right? So that's what I was anticipating on GJ. 1, GJ higher time frames are bullish. 2, we had all this liquidity generating in this area. 3, the potential to finally break these highs. 4, I wanted the hourly candle to close above 0.200, and we would have had those buys finally take place to 0.500. Yeah, GJ looks like it's going to break to the upside tomorrow with the GDP figures overnight. But it is what it is. Losses in the market are inevitable. You know what I mean? We cannot avoid losses in the market. It's only social media that advertises these false win rate percentages. You know what I mean? It's only social media that says you have to have a 80-90% win rate. You need to win 8 out of 10 trades, 9 out of 10 trades. That's not realistic. What's realistic is a 50% win rate. If you have a 50% win rate with a 1 to 3 risk versus reward, meaning your wins are 3 times larger than your losses, you'll still be profitable with those 5 out of 10 winning trades. You don't have to put so much pressure on yourself to go on a winning streak or win 9 out of 10 trades on a stretch. You can afford a 50% win rate on trades with a 1 to 3 risk versus reward ratio, as long as you stick to that reward ratio. Right? Before all of this automation, yeah, even really with the right RR and the right win rate percentage, even a 30% win rate, if you have a higher RR, you're still winning. A lot of people don't focus on that. It's actually, it's only on social media and on like all these marketers and people who are trying to sell something very fast and conveniently that say, hey, 100% win rate, 80% win rate, 90% win rate. And then all these new traders get hypnotized into thinking that if they don't win 9 out of 10 trades, that they're not doing well. That's not how the market works. The market's all math and risk management. Right? Yeah, higher the RR, the lower the win rate you can sacrifice. But the higher the RR is also lower probability to get those trades to play out. You know what I mean? Like, how often are you going to get like a 1 to 10 RR trade to play out? At least 1 to 3 RR is very reasonable. For a scalp, that would be like a 5 pip stop loss, 15 pip take profit. Or a 10 pip stop loss, 30 pip take profit. For an intraday trade or an intraday style like mine, that would be like a 20 pip stop loss and a 60 pip take profit, a 1 to 3 risk versus reward. That way I can sacrifice having 5 losses out of a 10 trade stretch. I can sacrifice a 50% win rate and still be profitable as long as you don't make any emotional mistakes like moving your stop loss, over leveraging, adding in more positions on losing trades. Then that completely destroys the risk management. That completely destroys the risk versus reward ratio. That completely destroys the whole concept. You know what I mean? If you move your stop loss, if you can't accept that trade managed loss think about it this way. If you're sticking to a 1 to 3 risk versus reward and you take a 10 pip loss, think about it as being a trader, it's your business expense. Just like a business doesn't only have revenue and profits, a business has expenses. A business has to take their profit, take their revenue, minus out their expenses, and then they get their profit. Then they get their income, right? It's the same thing with trading. You're not just going to win 24/7. You're going to have to take the winning trades, subtract out the losing trades, and then have your income. So with the math in place, any losing trade that is a pre-planned loss, meaning you said you're going to take a GJ buy with a 10 pip stop loss, and a 30 pip take profit and the trade loses at 10 pips. That is a controlled loss. You know what I mean? That is a controlled loss. Yes, exactly. Who the fuck is this? But anyways, that's what it is. Yeah, so it's all about the risk management. Any of these marketers, the Daniel Savages, the Q Banks, who only show winning trades, who don't show anything regarding risk management, who don't show anything regarding probabilities, and just trade Fibonacci's and technicals, they're just trying to sell the product, sell their service, sell their signals, sell their broker, sell their merchandise, sell their group, sell their community. That's all they're trying to do. Yeah. I wouldn't even take, okay, what about good risk management and a 1-to-1 RR? I wouldn't even take 1-to-1 RR trades. Think about it like this way, just realistically. Would you bet $10 to make $10 on something? Wouldn't you want to at least bet $10 to make $20? Right? The 1-to-1 RR trade is only going to be effective if your losses are still significantly smaller than your wins. To me, it's not really a good probability to put a risk in the market for the same reward. You know what I mean? Like I don't want to put $10 in the market to get a $10 reward. That's not good probabilities, and that's probably not going to be that's not going to have any longevity with it. I highly doubt you win 80% of the time though. For example, you know why I doubt people's 80 to 90% win rates? Unless you're extremely experienced or got, it's because back in the day, manual bank traders, the guys who are working the desk at JP Morgan's, who are working the desk at the Morgan Stanleys, who are working the desks at these various institutions in manually trading, you know what their win rate was on average across banks, across manual traders? 53%. No, Raja takes a lot of losses, but Raja minimizes his losses compared to the size of his wins. You guys are confusing the win rate compared to the risk management and trade management. I don't think Raja wins 9 out of 10 trades he takes, but Raja is very good at managing his trades and having his losses be smaller than his wins. But I don't think he wins every 9 out of 10 trades. Raja just has extremely good discipline and strong trade management skills. Raja is very good at closing a loss at a few pips, and his losses might be a few pips, but his wins might be 10, 20, 30 pips. So Raja doesn't focus on the win rate percentage. He focuses on the trade management. His losses are much smaller than his wins, so he's profitable. Exactly. Right? So he takes losses. He doesn't win 9 out of 10 trades. It's not all blues, but his losses are controlled. You know what I mean? His losses are controlled. His losses are smaller than his wins. He has exceptional trade management. And that comes from his experience, his discipline, his development. But when I'm talking about 90% win rate, that means you take 10 trades every week, you win 9 of them. That's not realistic. That's not good expectations to have. That's going to put too much pressure on you to perform. Every time you take 2 losses, you're going to be going crazy. You're going to say, fuck, man, I can't handle this. For example, let me give you guys a great tip. Let me give you guys a great example. How many of you guys have been on a win streak and you're feeling great? You're feeling like a god. You're on a 5 win streak. You're on a 10 trade win streak. And then you completely destroy it all with one big loss. How many of you have done that? I've done that. How many of you guys have been on a win streak? 3 wins, 5 wins in a row, 10 wins. and you're profiting, and then you destroy it all in one trade, one bad loss. Okay, do you know why that is? It's because the pressure to perform. Your brain is only looking at the fact that you just took 5 to 10 wins. So your brain cannot process that one loss. It cannot emotionally handle that one loss because you have this pressure to perform on yourself. So what happens when you take that one loss is you end up over leveraging. You end up moving your stop loss. You end up adding more positions to a losing trade, right? You double up, you triple up. And then it ends up being you destroy 3 weeks of profit in one loss. That's because you have a pressure on yourself to perform where you think every single trade should be a win. It's pressure to perform. You don't want your win streak to end. Because you can't emotionally handle your win streak ending, because overconfidence comes into play, greed comes into play, and that pressure to perform, now that one loss completely overtakes all your wins. And the market is that sensitive. In the market, you can lose $100,000 just as fast as you can lose $1,000. Okay? Now, think about it if you had the realistic expectations that you have a 50% win rate. Think about ahead of time if you understand that with a 50% win rate and a 1 to 3 risk versus reward that you will be profitable. No overconfidence, no greed. You know that you can sacrifice 5 losses out of a 10 trade stretch. You know that. As long as you stick to your 1 to 3 risk versus reward, as long as you trade manage your losses and they're smaller than your wins, you know that even if you take 5 out of 10 trades and 5 are wins, you're still going to be in profit because your wins are 3 times larger than your losses. Risk versus reward ratio, 1 to 3. A 50% win rate and a 1 to 3, in my opinion, is what I suggest on the bare minimum. And that's not anything out of the ordinary. That's like a 30 pip scalp on GJ, which happens every single day. A 10 pip stop loss, 30 pip take profit. A 20 pip stop loss, a 60 pip take profit. Okay? So the whole point is you have to come to the markets with realistic expectations. First, every time you enter a trade, a lot of people are on the glass half full. They're instantly thinking about winning. You should come into every trade expecting a loss. Not to say that your analysis is bad, not to say that your execution is bad, just to psychologically adjust yourself to a potential loss that can happen, because losses are inevitable. Number 2, you should understand when you're entering that trade, when you have your trade entered based on analysis that you already did with a hard take profit and a hard stop loss, as well as a strict risk versus reward ratio, that you understand that you can sacrifice a loss, that a loss is not the end of the world, that it's still within your plan, that it's an expense. Any controlled loss that goes to your stop loss without you over leveraging, without you over trading, without you doubling down, that is an expense. That is a controlled loss. That is just like how a business has expenses. A successful business has more revenue than expenses, and once you do all the math, there's their profit and income. It's the same thing with trading. You're not going to ever have just 100 wins in trading. You will take losses. How you manage those losses is the key to your success. It's not how you get the wins. It's how you manage your losses that leads to success in trading. It's very, I don't want to say easy. It's very easy psychologically to take a trade and have a win. It's very easy psychologically to handle that. You just won money. There's not much trauma there to deal with. It's very hard. It's much harder for a human to deal with a loss. But when you can dissect your loss as being controlled, as being a part of your plan, as being pre-planned, and you understand that you have a 1 to 3 risk versus reward, and that you understand that it's all based on risk management, and you can sacrifice 5 losses in a stretch of 10 trades, you will be profitable. Remember, guys, I always tell you guys this. The fundamentals and technicals in trading are extremely easy to learn. It's not hard to go put time into back testing the technical charts and learning how to read price action or map out market structure. It's not hard going to read a macroeconomics textbook or going to read Investopedia or going to watch all the capital hungry webinars and learning about fundamentals. The hardest part of trading is the psychology. The hardest part of trading is changing our personality and our bad habits that we had before we even came into trading. Okay? Psychology is the most difficult part of trading. All right? Yeah. So that's what it is, you know? Yeah, I still use the 1 minute time frame for entries regardless what style of trade it is. I still use PPLs on GJ, key levels on gold for entry points. That's just oil news. Oil news is like a routine every week, you know what I mean? Nothing crazy. It's a pretty quiet New York session, guys, today, to be honest. Most of our pairs are ranging here. UCAD did that up and down move and is just ranging. GJ's ranging. GU is ranging. Euro USD is ranging. Gold is also ranging within this intraday order block. What do you say about cutting profits early? Are you a scalper or are you an intraday trader? Because I have the same issue as you as well. My issue is anytime you guys see my trading slips, and I showed my private chat my trading slips, I showed you guys my trading slips hundreds of times, all right? All of my losses hit a hard stop loss, right? I have no problem accepting losses and taking losses with the ideology I just told you guys. My problem is I do not let my trades hit a hard take profit. I always get impulsive and I always close trades early even though they run to my take profit. That's my issue. So I have the same issue as you guys, Mohammed and Mohib, right? I got the same issue. I have no problem letting my losses hit a stop loss, but when I'm actively watching the charts and I see a quick impulsive move, I always get inclined to close that impulsive profit even though I have take profit targets that usually get hit in the long term, right? So I leave too much money on the table and I close trades way too early. But the way I am gonna overcome that is, number one, is when you do analysis, you're already planning what your trade. I was telling the private chat this. When you do analysis, right? You are all at your most objective viewpoint when you're doing market analysis without any entries in the market yet. When you're just doing raw chart analysis, you don't have any emotions involved. You have no trade involved yet. You're the most objective then. So that is when you're the most logical thinking. So first do analysis. Then when you have a pre-planned trade idea and you execute on that trade idea, set your entry, your stop loss, and your take profit and get the fuck away from the screens. That's what I'm going to do now. I'm not going to watch the positions run anymore. It's either going to hit a stop loss at the 1 to 3 risk versus reward, or it's going to hit the take profit. That's it. Yeah, there's nothing wrong with closing trades early. I'm just telling you how I'm going to handle that problem is I had no problem letting my trades hit a stop loss, but my trades would never hit my take profit. and that had nothing to do with price. It had everything to do with me closing trades early all the time. No, my FX journey did not make $1 million plus. She's a fucking scammer who scams people. She's a demo trading scammer. She's just a Gucci wearing dumb broad bitch. She did not make $1 million plus. She actually lost people's money when she said her cat got sick. You guys are following way too many of the wrong people. All right. But anyways, that's what I'm going to try to do. I have no problem with my losses going to stop loss, but I have to let my winning trades go to take profit. So what I'm going to do when I come back to trading is first do my analysis ahead of time, right? Then enter as per my pre-planned analysis. Then set the hard stop loss and take profit. And then get the fuck away from the screens. Whatever happens, happens. I already planned the trade. I already did the analysis. I already entered the risk. I already set the hard take profit and stop loss as per analysis. Why stress myself out just staring at a trade that I'm already invested in? You know what I mean? But anyways, everybody, today was a very quiet day for the New York session. All we had was the US CPI data, which we used to our advantage for some short-term gold buys. And pretty much today, we had this play out. Any objections with this? Gold buys 40 to 50 pips. Win. GJ loss 0.200 buy attempt. Break even to 5 pip loss. These are the only trades we executed on. Gold played out nice from the 1740s area, 1741. GJ, we wanted buys above 0.200. Did not get the volume and volatility we needed. We ended up trade managing that for a loss. Any questions? Any objections with that? Anybody have any questions about the gold trade we called out, or the GJ trade? Okay, because other than that, I'm going to pretty much be ending the stream now. We have 24 minutes until London close. There wasn't much going on after NYSE. Volume and volatility is not the strongest. GJ's ranging. GU is ranging. Euro USD is ranging. UCAD's also ranging. Gold had some nice intraday moves and scalps, but is not breaking previous intraday highs right now yet. Stock market had some nice buys as well. In the private channel, we do these sessions daily. Within the private channel, we do a weekly recap webinar on Sundays. I'll show you guys here to the left. All right, this is what we do every single week in the private channel, and these guys can vouch for the amount of content and shit we do every single week. All right. Fuck that, those. So every week we start off with some psychology webinars and psychology reminders and trading rules and journaling and reminders, right? Then we do shit, man. So much shit. I accidentally scrolled down. This is only this week? How much fucking shit do I do every week? Then I send a weekend news report. This is all on Sunday. On Sunday we do our psychology reminders. Then I send a weekend news report. Then we do a weekly recap and refresher webinar. Then I send an economic events report. Then we send a political events report for all the political speakers we have and central bank speakers. Then we do a market sentiment review and investor behavior review. Then we do a trade ideas webinar and a market update webinar. This is all on Sunday still. This is all still on Sunday, right? Then we did a gold update as well. Then we do every morning we do New York trading sessions. 5 days a week with a market update later in the afternoon. So we'll do a New York trading session in the morning, a market update in the afternoon of that day or in the evening. So in the Capital Hungry private channel, there's about 13 webinars a week with the weekly recap, the market update webinar, 5 New York trading sessions, 5 market updates during Asian session. On top of getting access to the Capital Hungry Market Monitor, Capital Hungry Key Level Price Alerts, Capital Hungry Newsroom, the Capital Hungry Educational Webinar Library Vault, and so forth. You know what I mean? So there's a lot of stuff in Capital Hungry. You get access to the newsroom, the banter chat, the trade room. The trade room has all the price alerts, other members sharing their analysis and news headlines, key level alerts, market monitor, session reminders, a bunch of stuff. I do the New York trading sessions 5 days a week in the private channel, every Wednesday on YouTube. All right. Besides the private channel, make sure you guys do me a favor and follow all the Capital Hungry. No problem, man. Thank you for saying I have a small penis, and thank you for your feedback. But for any of you guys who are too broke, don't have any money to join the private channel, don't worry about it. Make sure you guys watch all these educational webinars on the YouTube channel. You have like, there's so much on the YouTube channel you guys don't even understand. Yeah, Capital Hungry only makes me money because it's scalable to the amount of members it has. It's not, I don't make that much money on the individual members. You know what I mean? Each individual member pays me roughly $110 a month, which works out to $3 a day. I make a lot of money depending on how far I scale the amount of members. Remember, business is all value times scale. First, you have to find a need to fit and value to give back, and then how you could scale that. But anyways, all these webinars on the all these webinars on the YouTube. Capital Hungry free Twitter is a free news Twitter as well. This news Twitter does not have as much. This news Twitter does not have as much headlines as a news terminal. That's for private channel members. And then the Capital Hungry free Telegram analysis channel too. Yeah, minus expenses. Don't forget, like, obviously the Reuters icon terminal is like 20K a year. I got all these subscriptions like ChargeBee. PayPal takes a percentage of every membership. Stripe takes a percentage of every membership. ChargeBee is the backend subscription manager I use. The website subscriptions I have. Vimeo services. Zoom. Icon. Like, there are some expenses. Obviously, I don't have as many expenses as like a real physical store, but there are expenses I got. And PayPal and Stripe, the ones who handle the funds, they take a pretty good percentage. I still trade. I still do things outside of Capital Hungry as well. I don't know anybody who wouldn't want to have multiple streams of income. I don't know who would decline another stream of income. Even if I was making $100,000 from Capital Hungry and I was making $100,000 from trading, if somebody said, "Hey, Jeev, can you advertise for me and I'll pay you $1,000 a month?" I would still take that income. Why would you not? You know what I mean? Just like, look at Raja. You know how many streams of income Raja has? Probably too many to count now. I don't know anybody who would deny, like, even no matter how much money you're making, they would deny another stream of income that comes with minimal work being done, such as advertising or marketing or doing an IB or whatever it may be. You know what I mean? I don't know anybody who would deny that. Or anybody who has the skill sets to run a business who would not want to run it. I'm not trying to be rude. Most people don't have the balls or the courage to actually take the step forward into even starting a business. You know what I mean? But anyways, everybody, London close is coming up. This has been running for a couple of hours now. Markets are ranging. I'm going to go to the gym shortly and call it a day here. We took a loss on GJ for 5 pips. And we took a win on gold for 40 to 50 pips. We broke down fundamentals and technicals. Other than that, not much else going on today. I'm going to save and upload this, and I'll see you guys later. Private chat, you guys can re-watch this one on YouTube. It'll be saved on YouTube. and I'll see you guys all later. Yeah, all that for $110 a month. You don't have to pay me $5,000, no $1,000 one-on-one fee. You get access to 50 educational webinars that are not on my YouTube. You get access to all those sessions we do every single week, the news terminal. I'm not going to be doing 5 YouTube sessions a week. That would be disrespectful to people who pay for my services. Raja can do that, but I don't know what Raja does in market fluidity. I don't know what extra he does in market fluidity. Everybody else can do what they want. You know what I mean? I'm going to do what I want. They can do what they want. At the end of the day, we're good friends. We don't know you guys. All right, everybody. Take care. Have a great day. Have a great afternoon. Have a great evening.